everyone. Could you please confirm, is this audible to each and every one of you? All right, so I welcome you all to the second day related to game-changing webinar session being held by Virtual Institute for Higher Education, VIFHE, for Advanced Taxation being held under UK stream, right? And see, we had started discussing June 2025 attempt in yesterday's session, though we did not complete it. We were on section A, and in today's session, I'll be taking you to section A completion point as well as towards section B. And besides that, I'll share as well as reshare the things which are essential for the sake of passing your exam, right? So when we were discussing section A-oriented questions, what I told you that there are professional marks associated with the question, and with section A, you will find that there are 10 marks associated with it. So how you're going to present your answer, how many points you are making, in which way the communication skill, and through which mode of communication you are basically writing your answer, you how many paragraphs, how many statements you are making with respect to any requirement. These all things are to be discussed, and they had been discussed in yesterday's session as well. So let me just tell you that which professional skills we were talking about in last day's session. It's about evaluation and analysis. See, even in the last session, we had found that there were two financial modules presented to an employee. Employee was either given with an option to accept cars or to get an accommodation. And by comparing both of the situations, we had to decide that which of the option would be more feasible for that person. Sometimes your examiner is just interested in knowing that which of the option will be actually leading towards the higher tax cost. In some of the situations, examiner would want to know that what are the post-tax proceeds, and on the basis of those post-tax proceeds, you need to decide that which option is feasible for a particular person. By post-tax proceed, I mean to say that whatever the amount you have received, either through earning or by selling any asset, and after paying off the taxes, how much of the income is going to be left behind. And even sometimes we are supposed to make a comparison of financial cost of different alternatives. So as what we had discussed in yesterday's session, that the employee was given with an option to accept 2 cars or to accept accommodation. And either way, if the employee would be accepting the car, then the employee had to arrange the property herself. And on the other hand, if she would be getting an option of accommodation by the employer, then she'll have to arrange the car all by herself. And then eventually we had to see that how much of the cost in total she will have to bear. And then on the basis of then we had to decide the most feasible, the most relatable option. And even we had discussed the post-tax proceeds thing in the last session as well, where an individual was confused whether to sell the asset right now or to make a disposal later. Because right now, if he's going to make the sale, he was not eligible to pay off CGT. And if he had to delay the sale, delay the disposal of non-current asset, there he had to bear taxes. So after paying off the taxes, in which situation he would be able to generate higher sort of income. So this was basically the evaluation and the analysis skill which your examiner is deeply concerned about, right? And I told you people that whensoever you will have to make an explanation with respect to anything, you will have to make the valid points according to the marks associated with the requirement. So if any requirement is carrying 4 marks, that means your examiner is basically asking for 4 valid points to be given. And then the communication skill, which is not the tool to be tested with section B questions, rather it is the tool which is like examinable only with section A, while the rest of the skills, whether it's analysis and evaluation, commercial acumen, or even the skeptical skills. These all are tests. These are all going to be tested in section A, but communication skill is the only skill which is going to be tested as far as section A question is concerned, and that's not going to be tested by your examiner when it comes to section B. Okay, so what is meant by communication skills? In this regard, the student is basically asked to give their answer in a certain specific format, whether the individual is asked to make notes, or maybe he is asked to draft a memorandum, or to write an email. So there are certain communication modes within which you will have to present your answer. And then we have commercial acumen skill. Apart from tax, if there are other things which you have to consider in deciding a certain situation, in deciding like any one of the given alternatives, this is like said to be the commercial acumen skill which your examiner is interested in testing. As in, for instance, if someone is like going to dispose of an asset, of course, this would be like bringing about tax implication, but there could be a chance that timing of the disposal of the asset is like important as well. Maybe if a person is like going to make a disposal right now, he would be able to generate the cash right now, and his current issues, current cash flow problems will be resolved. Maybe by delaying the sale, he might be able to generate more of the disposal proceeds. He might be able to generate higher after tax proceeds, but maybe by then he would not be like having such critical cash flow problems which he's facing right now. So it's like the commercial acumen skill is all about discussing the other relevant aspects related to a certain situation apart from taxation. And then the skepticism. As in, whensoever you find that there is like something obnoxious about a certain situation, and you just need to be like interrogative, as in if the disposal date of an asset is not given in the question, and your answer might vary dependent upon the date on which the asset is being disposed of. So all the relevant factors which might change the scenario, which might change the answer, these all interrogation inquiries should be like written in your exam script. And this is like how you are showing your skeptical skill, right? So it's like I have given the hints as well. This is the document which will be shared with you people as well. That, for instance, you are writing down an answer to a certain situation, and then you are going to add particular words that this is not clear. This seems to be a little bit unclear from the situation, that when it is going to be sold off, when to whom it is going to be sold, because if the transaction is like going to happen in between connected parties, then the answer with respect to taxation is like obviously different. So this is how you need to use particular wordings in order to highlight that you are getting interrogative about a certain situation, right? Now, students, I am going towards the same question that we were discussing yesterday, but before that, I would like to ask you that if you have anything general in your mind or specifically related to the session which was conducted yesterday, then you please drop your concern in the dialog box. I right now received a query that yesterday question solution is required. Yes, definitely that's there in my mind, but I had to obviously first complete this whole script, whole June 2025 exam, and then I had to transfer you the standard solution, right? Of course, I couldn't send it just at the end of yesterday's session because the things were not completed by then. Okay, so anything else you have in mind? If yes, then please speak up, drop your concern in the dialog box. So I believe that there are no further questions in your mind, right? Okay, so as there were 4 exhibits in section A question, and that's not the hard and fast rule, you may find 3 exhibits or even 5 exhibits when it comes to section A of advanced taxation exam. But see, whatsoever is the last exhibit of section A, there you will be finding the requirements related to the question. So out of these 4, of course, the 4th one is the last exhibit And this is something which we were discussing yesterday. And we had discussed till requirement B, sub-requirement 3. Now, we shall be discussing requirement C, where we have to discuss Tyrell's new unincorporated business. And what the requirement is, prepare a memorandum. And see, this is the third step, where this is the third time basically, where we are supposed to produce our answer in a certain particular way. I mean, the mode of communication is changed. See, last day, we had to draft an email. We had to write an answer to an email. Then we had to prepare meeting notes. And now in the same question with part C, we are supposed to make a memorandum. And by the way, the format related to the memorandum is like quite similar to what we have discussed before. All right. So what do they say? That the registration for the purposes of VAT, the value added tax, for which Exhibit 3 is important. And this is like the best part with Section A, that first you've gone through the entire question, but then when you come at the requirements, whenever you have to go back, you are not going to reread each and every statement. Rather, you will be opening up a certain document where the particular information will have been provided, and they will be explicitly telling you people, that's how, just how they have mentioned it over here. So Exhibit 3 is to be considered for the sake of answering this part. And they say that when carrying out this task, you are not required to refer to the specific product design cost or the business promotion cost. You should note that Tyrell will not be accounting for VAT using the flat rate scheme. And then, so keeping these two statements in mind, what do we need to do? We need to explain. So when explanation is asked, we will be using word processing document, and do not forget making a heading in the start of your solution. And for the sake of like saving your time, you may simply copy the line, the requirement statement, and you are just going to paste it on the answer script and just remove unnecessary words in order to convert the requirement into a heading. So explain why it will not be compulsory for Tyrell to register for VAT, but he could choose to do so voluntarily. And the second explanation is the factors in relation to output tax and input tax, which will help Tyrell understand the financial advantages or disadvantages of registering voluntarily. And this part of the question is carrying 7 marks. So altogether, in explaining these two things, I shall be making 7 valid points. And for instance, if you people know this topic very well and there are like a lot of information coming in your mind, please do not waste your time in like making lengthy paragraphs. 2 to 3 statements for a sake of making one valid point, they are like more than enough, right? So I'm just going to click on Exhibit 3. And this is the situation related to VAT. What if you'll quickly go through this information so that I'll start discussing the solution with you people? Because obviously this must have been skipped from your mind. So just read it first, and it will not be taking much time. Do update me when the screen has to be scrolled up for the sake of showing you the remaining portion related to this exhibit. Shall I scroll up the screen? There were like only 2 to 3 lines left behind, so you may just cover them up quickly, and then we'll be discussing the answer related to this requirement. I just hope that you all must have been done already, right? Okay, so let's open the Word document, because here the explanation could be given easily. But one thing, I really want to make a heading, because without that, I don't think my presentation would be complete. What if I am going to the requirement? And I'm going to the Word document. And I'm going to paste it over here. And I shall be mentioning the requirement alphabet. It is C, which is about explaining the factor, but I'm going to turn it into a heading. why it will not be compulsory for title to register for VAT. It is like enough even till this point, or you may complete it by just um, keeping it intact that he could do so voluntarily. So this is like a very general thing being asked when a business is required to register compulsorily. It is like whensoever the taxable turnover for the previous 12 months has crossed the threshold of 90,000 pound. And see, what is his maximum annual turnover? That seems to be 60,000 pound, which is why, as it is not going to cross the threshold, which is why it is not compulsory for him to register for VAT. So I'm just going to write this point over here as title taxable turnover for 12 months has not crossed the threshold of 90,000 pound, which is why there is no compulsion to register for VAT. This is the first point. And he may do it voluntarily. Of course, a person who is like involved in making taxable supplies, even if his threshold is not crossed, he may still register himself with HMRC for VAT purposes. But this would then be considered as like someone being registered on voluntary basis. But he may register voluntarily as he is involved in making taxable supplies, right? Okay, but the thing is, I had to make the memorandum pro forma. Do you remember this thing? That they did not just ask for the information to be quoted over here, they wanted us to make memorandum. So there is a particular way of presenting something in the form of memorandum. I will first of all be like giving the heading that this is the memorandum. And then for client files, this is like being done. And then see, do you remember that for notes, we are using exactly the same format. So for notes and memorandum, this is like something you are creating for your internal sake, and later you will be like sharing it for future purposes, for like conducting future meetings with your client, which is why they are having more or less the same performer. Then you will have to mention the name of the client, what the name of the client over here, that is title. And then you will be mentioning the subject, sorry, what the subject is, that it is not just requirement C, requirement D is like also associated with it. It is like his multiple corporate matter, multiple business matters. So his unincorporated business, and then who has prepared it, or you may simply write from, prepared by. Is my voice clear? Is my voice clear? All right. Because I suddenly received a message that there is a disruption. So I thought better to ask from you people first. So who is like preparing it? It is like all being done by the taxenia, as what we have seen it since yesterday, and the date, obviously, which is, if you remember that in the requirement section, the date was mentioned in the start, and it was 1st of August 2025. Let me just make a little bit formatting things. All right. So just to make the things presentable, I have done this. Okay, so I have mentioned that Tyrell is not required to register compulsorily, though he can do it voluntarily because he's involved in making taxable supplies. So this was something I had to mention, the way through which he could register himself with HMRC for VAT purposes. But if you just go to the requirement, they have said that explain the factors in relation to output tax and input tax, which will help Tyrell understand the financial advantages or disadvantages of registering voluntarily. So if a person would get registered, either he register on compulsory basis or voluntary basis, there he will be like finding certain benefits, but he might experience certain issues. So both the pros and the cons are to be discussed. But of course, if a person is like crossing the threshold of £90,000, which is about taxable supplies, then of course it becomes mandatory for the person to go for VAT registration. But in voluntary cases, one should better understand the implication. Yes, you're right, input VAT can be claimed. So I'm just going to, I think I should make a heading of implications of registration of VAT. So the first heading is now split, and I'm making another heading, which is about implications for VAT registration. So as what you've said, that he is able to claim his input VAT related to business goods and expenses, right? And what could be another advantage or another implication, another treatment? See, he's like going to register right now. So whatsoever the goods he has acquired in 4 years time period prior to the date of registration, I hope you remember the point pre-registration input part. He is like in a situation to cover them as well, right? So pre-registration input VAT in respect of business goods acquired in 4 years time period before the date of registration, that is also recoverable. And in case of expenses, it is just related to 6 months. So I'm just going to copy the line just to save my time. Pre-registration input VAT is also recoverable, but I'm just going to give a little bit different feeling to the line. Is also recoverable in respect of business expenses in 6 months time period from the date of condition to be met as well, that these goods were definitely there, definitely available in the stock. They were there in the business premises, provided they are as I am receiving points from your side and you're asking, you're just telling me about, you are telling me about the output VAT being charged. I think, yes, I'm like noticing the same issue, that there is some internet disruption. Let me just change the network and then I'll resume. Just give me a minute. Is my voice clear now? Is my voice clear? All right. And there was a question that if it is service, then it's for 6 months, yes, and not for the 4 years. 4 years is for the tangible items, whether it's like goods or the non-current asset. Right? Okay. And when a person would get registered for VAT, obviously they will have to charge VAT over the selling price of the product. And this is something majority of you sent me in the dialog box. That's the correct line, that Tyrell will have to charge 20% VAT on all of his sales. But see, if it's like going to add VAT into the selling price of his product, the product price will be increased, which in certain cases might not be like having any impact, but in few cases, this is like going to be a very deadly thing. Do you understand this thing, that if VAT is going to be charged over the selling price of the product, then the product price will be increased? So for example, if Tyrell used to sell something for 200 pounds before registration, but now after registration, he's going to charge VAT at the rate of 20%. I mean, 40 pound is being added. So now the product price has become 240, which is obviously going to be sold to the customer. But if the customer is already doing a business and his business is registered, if a customer is a registered person, then whatsoever the price they are paying, if VAT is included in it, then the VAT will be recoverable. So customer initially will have to account for 240 pound to be like spent in terms of their expenses, but later on they'll be able to recover it. So this is like not having an impact with respect to those customers who are already registered. But if Tyrell is going to make a sale to those customers who are not running the business, I mean, members of general public, or maybe there are certain customers who are running the business, but unfortunately their business is not registered. So either way, it would mean the same thing, that public members or non-registered businesses, if you are making a sale to these people, they will have to unfortunately bear the exaggerated price, the increased price, and they would not be having any way through which they would be like recovering any input VAT. So this is like going to be another implication as well. And what kind of customer he is like having, was that told in the exhibit? Yes, you may also make the heading of advantages and disadvantages separately. That's perfectly fine, as long as it is relatable, which is like quite obviously the case is. So yes, you can make this heading. And two of you have told me the same thing, which I was like saying, and that's perfect, brilliant. So I'm just going to open the exhibit in order to see that what kind of customers he had. See, in the requirement section, they said that you will not be like telling anything specifically with respect to the products that he is like selling. But as they haven't mentioned in the anything in the requirement, which is why I had to open the exhibit, and here it says that I will have some non-business clients. So he'll be like having non-business clients as well, as he's making business sale to small businesses. So if he's like going to add VAT into the selling price of his product, that is like going to be a burdensome thing for those people. I'm just going to write them down on the Word document. If the sales are made to either non-business customers or the business customers who are not registered, that would mean the same thing. The recovery of input VAT by those customers is not possible. And then obviously, what is basically the repercussion? I mean, what decision he needs to take in respect of this? Of course, if he registers himself, he will be like, he will have to charge VAT over the selling price of the product. But if his customer is like not registered, then they will not be like happy about this thing. Then how he will be like dealing this situation? Yes, it may lead to the loss of the customers, but for instance, if he would not like to lose his customers, then what? See, in such cases where by increasing the selling price and the customer's inability to recover input VAT, if you really want to if you really do not want to lose your customers, then yes, you would be like reducing your selling price. And that's how, even after charging the VAT, the price for the customer will remain the same. So for instance, if I say that, I'm just telling it for the sake of like making the whole situation clear. Let's suppose if he says that I am going to change my selling price from 200 to 167. So the selling price for the title, if he changes it, then obviously after registering for VAT, he will have to charge VAT with respect to the selling price. So VAT at the rate of 20% shall be equal to, see, 167 into 0.2, that would be like 33.4. I'm going to take it as 33. So what is going to be the gross price of the product? That is 200. So he used to sell the product for 200. He is now even selling the product to 200 to their customers. So their customers base would remain unchanged. They will not be unhappy with the situation, but the whole burden will have to be faced by Tyrell, because now his selling price and of course the profit margin has been reduced. If you are wondering that how did I exactly come to the point where the gross price will be the same, I have picked up 200. I thought that if he would like to charge the same price even after including VAT, so selling price is always taken as 100% and VAT percentage is 20. So if he want to charge something which includes VAT, so I am going to consider as if this 200 pound is equal to 120%. So if 200 pound is something I assume to be equivalent to 120%, then what price? I mean, what is going to be equivalent to 100%? So that would immediately be giving you the price figure of 167. Yes, your point is right that he will have to sacrifice his selling price. He'll have to drop it to, in an attempt to not pass the burden of VAT towards his customer. I'm just going to write this point over here. If he doesn't want to pass the VAT burden to his customers, then he will have to decrease his selling price, and eventually the profit margin for the sake of keeping their customers. So I've made ample points, but see, none of my point is like crossing two lines. So the two statements basically. So as what I've said, that you will not have to make like 3 to 4, you will not have to write 3 to 4 statements in order to make a certain point. 1, 2, or maximum 3. That is it, right? So up to 3 statements could be made in order to prove a certain valid point. See, this was a 7 marks part. So it's like 1, 2, 3, 4, 5, 6, and 7, and 8. So I've made 8 points, right? Right? So this is how you are going to present your answer. Is there anything else which is like still not being understood? If yes, then you may please drop your concern in the dialog box, and then I'll quickly take you to the last requirement of this question. And here comes requirement C2. It's about tax allowable expenses. And again, exhibit 3 is important. It says that I can confirm that the chef's knives, which are to be given to potential customers, are not those items which will be sold by Tyrell in his trade. With that in mind, explain whether or not the product design cost and the business promotion cost will be allowable while calculating his tax adjusted trading profit. And this is carrying 5 marks. So while this is about the product design and the business promotion, this is like the relevant information. And they're asking, would the cost be deductible while calculating the tax adjusted trading profit? See, with respect to unincorporated businesses, they have a choice to either calculate their profit according to accrual basis or the cash basis. And of course, there is a little bit difference in handling the two ways of calculating your profit. But generally speaking, costs are allowable where they are made for business purposes, wholly and exclusively for business purposes. And there are certain expenses, they have been mentioned exclusively, explicitly, to be taken as disallowed expenditures. Those expenses, despite being made for business purposes, are not deductible. Otherwise, if any expenses being made for business purposes, that is generally allowed. And though individuals do have a choice whether to pick up accrual basis of adjustment or the cash basis of adjustment, but can you please tell me what do you have in mind? If it is not mentioned in the question that which option the individual is taking up, would we be applying cash basis or accrual basis? I'm just asking this question to from each and every one of you. So I've received many answers. All of you are adamant that we shall be using accrual basis. We shall be using, sorry, cash basis, right? But there I have learned one more point, which is mentioning the limit of 150,000. See, that was like something related to previous Finance Act. This is this is really not going to be a material thing right now. So anyone can join any of the options for the sake of adjustment of their profit. And whosoever would like to go for cash basis or accrual basis, there is no such limitation or restriction in terms of. So this is your final answer. You agree that it is the cash basis when we'll be like applying a default basis for the sake of adjusting our profit. You all are right. I was like purposely confusing you people because see, when it comes to companies, companies have got only one way of adjustment of profit, and that is the accrual basis. They do not have an option. Previously, cash basis used to be the optional thing, while the by default basis were accrual basis. But this time round, now individuals will be like picking up cash basis for the sake of calculating rental income, as well as for the sake of calculating trading profit. I just wanted to keep that thing like fixed in your mind that yes, it is the cash basis for both rental income calculation and trading profit adjustment purposes. for individuals, but though they are like simultaneously having the other option of calculating the income as well. But when it comes to companies, they do not have an option. They just have accrual basis of adjustment for both rental income as well as for trading profit. Okay, so I was discussing a point related to tax allowable expenses. And I said that unless and until there is certain expense which is specifically disallowed, all those expenses which are incurred wholly and exclusively for business purposes are meant to be considered as allowable expenses. When it comes to the designing of the product, the design cost is allowable for tax purposes. Why? Because product designing cost is something like which has been incurred wholly and exclusively for business purposes, and this is not explicitly mentioned to be a disallowed one by HMRC. But see, this expense is incurred in September and the business is going to start later, right? So the business is like going to start on 1st of December, but we all know this thing that there is a concept of expenses being incurred in 7 years prior to the start of trade. These are known as like those expenses which, if they are incurred, they are also allowed, and we shall assume as if they are being incurred on the starting day of the business. So considering the expense has been incurred in the allowed time slot of 7 years prior to the commencement of trade, and see, even if this expense would have been incurred once the trade would have been commercially started, so this expense is allowable, and we consider as if the expense is being incurred on 1st December 25, I mean the date on which the business has actually started doing trade. But when it comes to the cost of business promotion, see what they are doing. The traveling cost will be allowable for tax purposes. But the cost of buying lunch for prospective clients is like going to be taken as under the capacity of entertainment expense. And see, do you remember that entertainment of your customers or suppliers, I mean, third party entertainment is not an allowed expenditure. So this is like not going to be deducted, but the proposed gifts will be carrying a conspicuous advertisement for title business, and it is not basically consisting food, drink, tobacco, or voucher exchangeable for good, which is why the cost of the gift would be considered as allowable for tax purposes. But there is a cost restriction as well, and that is what that the cost per person per year should not be crossing the limit of £50 a year. Yes, you're technically right, absolutely right. So I'm just going to show you the answer straight away. I think you have got the point, right? And there you go. This is the standard solution. And of course, it is like carrying all the relevant headings, and I had to obviously write them down in the Word document. But see, they have produced ample statements. Though this question is, I believe, carrying 5 marks, so 5 valid points are sufficient. And whatever the point you are making, you need not to elaborate it by making multiple statements. Just keep it short so that you would not end up wasting your time. Just read it out and then I'll take you to section B, question number 2. Do update me once you're done reading this answer so that I would take you to section B. All right, so let me just take you to the next section, for which we believe that this is like simple and straight as compared to section A, which is why when it is said that you need to take a start with the easier question first for the sake of time management purposes, it is usually advisable that do handle section B first. But keep that timer thing in your mind that whatsoever the standard time has to be consumed by a certain requirement, that threshold should not be crossed. As what I told you people, that your exam, computer-based exam, is going to be of 3 hours and 15 minutes long. So just keep 15 minutes set aside, because obviously the length of the question is long. You must be taking a lot of time in reading the question. So you will be left with 3 hours, 180 minutes. This is like specifically the time for writing purposes. So technically, generally you have 1.8 minute for the sake of securing 1 mark. But if you are not going to keep that reading time at a side and you're going to take everything on altogether basis, then 3 hours and 15 minutes would mean you have altogether 195 minutes. And in that case, obviously the standard for handling 1 mark will be changed. It would then become 1.95 minutes. So approximately 2 minutes are there for the sake of like handling a certain question. And that timer has to be there in the mind. So for instance, if I'm just going to take a start with certain requirement having 4 marks, so I shall see that what the time is like right now, and 4 marks into 1.95. So at what time I should have completed a certain requirement. And if I'll be crossing the limit, of course, I'll have to change the things. I will have to amend the timing criteria for the later questions. But see, generally speaking, though your paper is of 100 marks, have you ever thought that section A is of 50 marks, out of which 10 marks are basically associated with the professional skills? The way you are presenting your answer, and technically you need to cover the concepts for 40 marks. And similarly with section B, as it has 2 questions of 25 marks worth each. So altogether, 50 marks are associated with this requirement. And with every question, you will have to deal with the concept for up to 20 marks. So it's like 20 and 20, that would be 40. So technically, you have to handle 80 marks in how much time? In 195 minutes. So if you're just going to look at the question this way, your average time for the sake of securing a mark will be increased. So yes, as long as you just keep on like planning the things within this time period of 195 minutes, you will remain on the track. You will be able to finish your exam, and obviously the chances of passing your paper will definitely be increased. All right, so as what I was taking you to section B. Now, it is the question. First of all, you're having a background information on the right-hand side, and then I'll click on the exhibit to show you the remaining content of the question. Kindly start reading the background information. Shall I show you the exhibit? I believe that you all must have been done with this. And with section B, the exhibit will just be showing the content, the information thing, and the requirements are written separately. Though this was not the case when it comes to section A, because in section B, within the body of the question, you could have found the requirement, though there was like an extra tab for requirement as well. But this was like a generic sort of requirement where they're saying that what the today's date is, and you will have to deal with 40 marks for for the conceptual purposes, while the rest 10 marks are associated with professional presentation with respect to the exam. So that was the general thing we already know. But okay, and I did come across a certain question which I was like about to answer, but then I forgot. There was like someone who said that don't we have to use the words regards, tax advisor, the formal wordings that we use at the end of anything. See, with notes and with memorandum, we are not supposed to do such things. First of all, I should say with notes, we would never. With memorandum, yes, in the end, you may write from tax senior, but with emails, yes, generally just think that how do you actually close your email? With the emails, you eventually write in the end regards, tax advisor. So yes, you may write it down. Sometimes examiner does mention in the standard solution, but like I mean, nearly 80% of the exam scripts, I haven't seen it. So if you're going to mention it, it is not going to create any harm. It is the best thing. One has to quote when closing up an email specifically, though you may also write the name of the person who is drafting a memorandum in case of handling a memorandum. But with notes, there is no need to mention anyone's name in the end of the script. But if you're going to forget it in the end by the time you are closing your exam script, I believe that this is not something for which any concern had ever been raised in the past, right? So if you do it, this is the best. If you don't do it, I don't think that apart from like creating an impression, this is like going to provoke your examiner to deduct any of the marks. Okay, so I'm just going to click on the exhibit now. I'm just going to increase the size of the exhibit. All right, start reading it out. I will be like scrolling up the information. Once again, and afterwards I'll have to show you a little bit leftover portion of this question, and that's how at least the question would have been read completely. I just believe that you people must have covered the question completely. Is that so? Okay, so I've clicked on the requirements. There will be like at least 3 to 4 requirements must be associated with any section B question. And 20 marks, as what I've said, will be revolving around conceptual things, while 5 marks will be associated with professional skills presentation. Okay, so we should assume that today's date is 1st of March 25, and here requirement A, which is of worth 9 marks, that's quite huge. It's like to calculate with supporting explanation the increase in Cloak Limited's corporation tax liability for the year ending 31st March 25 as a result of selling the warehouse and the shares in Set Limited as proposed. Okay, so they are selling out the warehouse and the shares. And see, this is the information related to the sale of warehouse and the shares. And I really want you people to at least spend 2 minutes in letting me know that what is going to be the gain related to the disposal of warehouse. Keep one thing in mind, that this warehouse had been used. Warehouse is a building, obviously the building used for trading purposes. And this must have been used for 5 years for trading activities, which is why it must have claimed SPA, the structures and building allowances. Though unlike capital allowances, whensoever a building is going to be sold, there is said to be no balancing allowance or balancing charge need to be calculated in the period of disposal for SPA, though we usually go for when it comes to capital allowances, but there is no SBA adjustment with respect to the date of disposal. But when we are going to sell off any asset which has qualified for SPA, all the SPAs, the cumulative amount of SPAs that we have claimed in the past, shall be added to the selling price. And that's how the selling price will be increased. And of course, the gain will be increased. And on the huge amount of gain, one will be paying higher amount of taxes. So what I actually want you people to do, kindly calculate the gain related to the disposal of warehouse, at least in this case. It shall be taking 2 to 3 minutes maximum. So I have got 2 answers. One is 70. Okay, the third one is here as well. 78,300, 66,060, and 47,700. I think this 78,300 is the correct answer. But that's perfectly fine. With ATX, the best advantage is maybe you have picked up the correct selling proceed. You must have taken up the correct value for SPA. Maybe you did not pick up the correct value for the cost, for instance. then that would mean that you are not going to lose all the marks related to the computation of gain related to the disposal of building. You will still be able to secure maximum marks, right? Okay. So see, when it comes to the calculation, and I believe it is like going to be a little bit extensive calculation. See, mark my words, little bit extensive calculation. So I believe that I cannot be able to do the calculation. I cannot take care of the formats on the word processing documents if the calculation is a little longer. So I think I should pick up the spreadsheet, and I am going to open the requirement first because I really want to copy this requirement. I'm going to the spreadsheet and I am going to put heading first. And there is no requirement related to notes, memorandum, or email. I mean, communication skill is not going to be tested when it comes to section B. Control V, this is C, the whole requirement is there, but I'm just going to turn it into the headings. So the increase, I have removed the task to calculate and explain the increase in Cloak Limited Corporation tax liability. And this is my subheading, selling the warehouse. And I'll be making another heading related to disposal of shares, or maybe just simply the warehouse disposal. And then I'll mention the shares disposal. See? Okay. So at what price the warehouse is being disposed of? Let's open the exhibit. It says the warehouse is going to be sold to an unconnected person. And the disposal figure is of £255,000. Of course, when one is going to sell off the building, it is obviously the understood thing that not just the building, the land is going to be sold as well. Though in certain rare cases, one would be like selling off the structure by keeping the ownership of the land with himself. But generally, when it is said that the building and the land is being sold, so we are going to take into account the total of the disposal proceeds, which is of £255,000. Okay, so this is like said to be the disposal figure. Sorry. $255,000, and as what I've said that all the SBAs which have already been claimed are going to be added to the disposal figure, but SBA is something, the structures and building allowance, which is only going to be calculated on the structure. So what the structure figure is, again, I'm going to click on the exhibit. The building was having a cost of £102,000, right? So on the original cost of the building on which one had started computing the SPAs, all the successive persons who will be like having the building with them, they will have to keep on charging SPA on the same original price. So this is the building cost 102,000. The original figure shall be used for the sake of like computing SPA. And see, this was like acquired on 1st April 20 and gonna be sold on 31st March 25. So it's like quite clear that the building has been used for 5 years. So it's like 105,000 is the cost of the original cost of the building into 3% being the SPA rate. And I'm just going to take a cumulative figure for 5 years. So this is of 15750. But this is 102,000. Sorry, not 105,000. Let me just clear it. Yes, sorry, it was 102,000. By mistake, I said it was 105. So it is of 15,300 pounds. So SPS already claimed shall be added to the disposal figure of the overall asset. So the total proceeds figure will be considered equivalent to 255,000 and 15,300. That would be of 270,300. There is something wrong with the portal right now. Just going to do the calculation manually. It's 270,300, right? I think some sort of formula got fixed over here. Let me just change. Okay, let me, sorry. I didn't, uh, I didn't forget that thing that sometimes it would happen that by not having an ample space, the formula is like turned to the nearest concise value. So what the cost figure is, and thank you for telling it. The cost figure is going to be deducted. So now what is being sold off? Of course, the land and the building. So their cost is what? According to the exhibit. Though the original cost was 192,000 pound, but this was the cost related to set. Though I use the original cost for the sake of computing SPA, because for instance, if I have acquired the building, a newly constructed building, I shall start computing SPA on the cost of the building. The cost to me is like being used for the sake of computing SPA. But when, for instance, after 7 years, I'm going to sell the building to someone else, then the successive customer will have to charge SPA on the original cost of the building. And when he's like going to make a further disposal after a few years, even the third person who is going to acquire the building shall have to continue the same cost, which was like relevant to me for the sake of computing SPA. But here on 1st April 20, the whole structure, including building and land, was acquired by Set Limited. And then on 1st of April 2024, as what you have read, Set Limited had sold the building to Cloak Limited, where the market value was of 234,000 pounds. But since these two companies were in a chargeable gains group at that time, chargeable gains group would mean that having a 75% shareholding at every level and having an effective shareholding of more than 50% in all indirectly controlled companies. In such cases, whensoever the transfer is going to be made either by Set Limited to Cloak Limited or from Cloak Limited to Set Limited, the acquiring company shall acquire the asset over its original cost plus indexation allowance if applicable, till 31st of December 17. So when Set Limited had sold the shares to sold the warehouse to Cloak Limited on 24, the original cost, which is of 192,000 pounds, shall be picked up. And see, the cost was basically associated with 1st of April 20, after which the concept of indexation allowance was like already gone. Otherwise, if had this transaction has happened before December 17, then of course, up till 31st December 17, we would have added the impact of inflation as well. So I'm just going to deduct the overall cost for the recipient company. It is of 192,000 pounds. Okay, so cost is deducted, and that's how we'll be able to come to know what the chargeable gain figure will be. 270,300 less cost. This would be of 78,300 pounds. So this is like said to be the chargeable gain for Cloak Limited in respect of disposal of their warehouse. And I'm not going to deduct Indexation allowance, because of course, with respect to the date they had acquired the asset, till the date of disposal, the companies are no longer in a position to claim indexation allowances. Is this thing clear? Okay. Now the fact is that it is not just the warehouse, but the shares are in the picture as well, which are being sold. And not just we were supposed to do the computation, we need to explain the treatment as well, right? So while calculating the gain related to the disposal of warehouse, I had to like include SPA. And then when at the time of like deducting the cost, I did not deduct the cost which was like applicable at the date of transfer of asset from Set Limited to Cloak Limited. Rather, I had to take up the original cost. So this explanation, which I just kept on speaking while doing the calculation, this explanation should be written as well. But see, the explanation, though it should be covering the maximum points, but do not do not go overboard, do not consume a lot of time. Your time is precious. Keep this thing in mind. But this thing is, now for the sake of explanation, I have to click on the Word document. So that would mean that for the sake of answering this part of this requirement, I shall be using both documents, the word processing documents and the spreadsheet simultaneously. So first of all, what will I do? The heading that I have used, I shall be like copying the same heading and I'm going to paste it on the Word, so that whenever examiner will be like checking anything, it would be like creating an ease for him to check all the information that I have inserted with respect to this requirement. Okay. So the first information is that SPA is calculated on the original cost of the building, and it doesn't require any balancing adjustment at the date of disposal. But all the SPAs already claimed shall be added to the disposal proceeds of the building at the point of sale, right? So this was like a very particular point for the sake of like figuring out what the gain figure is. And then the second thing, which was like very important, that was the cost. So as Set Limited and Cloak Limited are a part of chargeable gains group, which is why the original cost plus indexation allowance, if any, shall be taken as base cost for the group member, the company, who is receiving the asset. Right? So this is how I have made ample explanation. Now I think I should move to shares. See what this disposal of shares is all about. Cloak Limited is going to sell their shareholding in SET Limited. If you are having a shareholding of at least 10% in any company which has been kept for at least 12 months, at least 1 year, in 6 years prior to the date of disposal, then no gain or loss shall need to be calculated. Yes, you are absolutely right. When well, you have mentioned the whole calculation as well. I've just noticed it. That's marvelous. So this is like going to be covered completely under SSE, the substantial shareholding exemption. This is basically a very exceptional thing which is available to companies. But keep this thing in mind that there are few conditions which are to be met. Number one, the minimum shareholding, which is 10%. The retention period 12 months in any 6 years prior to the date of disposal. And the third one is that the company whose for which the shareholding is like being disposed of, that is like said to be a trading company, which SET Limited is. So I think if it is like going to be covered under substantial shareholding exemption, no calculation is required. But of course, I have to give the explanation. So I'm just going to pick up the word processing document. Shares disposal. I'm just going to convert it into heading. So I'm turned it into bold words. Yes, obviously, as long as the shares will be sold to any unconnected person, there you might start thinking about either computing gain or loss, but it will then be fortunately covered under SSE. Otherwise, if the transfer was being made to any connected person, then the transaction was like definitely exempt in the first step. So the gain arising on the disposal of shares in SET Limited is exempt because of the application of substantial shareholding exemption. SSE is applicable as Cloak Limited has owned at least 10% shareholding in SET Limited for a continuous period of 12 months out of 6 years prior to the date of disposal, and that the SET Limited is a trading company. Okay, I want to ask you a question. What is meant by like having in at least a shareholding of 10% for a period of 12 months out of 6 years? What is meant by this? So it should be sold to unconnected person. There may be a gap, but it should be 12 months within total 6 years. C Limited may sell and regain again. Total holding period should be of 12 months. Okay, so yes, you are right. Let me just simplify this thing. For instance, there is a company. I'll be taking the same names. Let's say it's a Cloak Limited. And 4 years ago, they had acquired shareholding of 18%, 18% in SET Limited. Okay. And then as it happened 4 years ago, after, let's suppose, 3 years, they sold 10% holding. So when Cloak Limited had acquired 18% holding in 2020, but after 3 years, they dispose of 10% holding, then the gain will be covered under substantial shareholding exemption. Why? Because if we look back for the previous 6 years, though the company did not retain the shares for all the 6 years, but in those 6 years, had there been any chance that there was a continuous period of 12 months where they had kept at least 10% holding? Yes, not just 12 months, they had kept the shareholding of 18%, I mean more than 10% for 3 years. And the criteria was like, in the last 6 years, do you find any 12 months in which shareholding of 10% would have been kept? Yes, which is why the gain or loss will not be computed, as it is going to be covered under SSE. Now, how much of the shareholding is left? 8%. Let's suppose after 1 year and 2 months, let's suppose almost after 1 year and 2 months, the remaining 8% will be sold. Of course, once again, we will consider whether this transaction will be covered under SSE. And again, what we need to see is that just look back that what has happened in the 6 years before the date of disposal, which is like, let's suppose, happening in March 2024. You need to, with reference to this date, you need to look back for the previous 6 years, and you need to figure out that in the 6 years prior to the date of sale, do you find any such 12 months where you had kept a shareholding of at least 10%, though the shareholding being disposed of is 8%. But I'm not reiterating on this thing that what is being sold, what was being owned in any 12 months in the past 6 years. Yes, in the past 1 year and 2 months, the shareholding was low, but then we do have like ample period, not just 1 year, not just 12 months, but a quite considerable period in which a minimum shareholding criteria was met. And then, surprisingly, even on the disposal of this 8% holding, there is no need to compute either the gain or the loss, because it is going to be covered under substantial shareholding exemption. Did you all get this point? That at any point in time in 6 years before the date of disposal, if a company would have kept a shareholding of at least 10% for 12 months period, and in how much time slot do we need to find these 12 months in this is such a liberty that we'll be like finding this out in 6 years prior to the date of sale. So if this is like happening this way, then the gain or loss shall not be like taken into account, as it's going to be covered completely under SSE. Is this thing clear? The question is, a company buys shares which is not 6 years, but assume that's for 2 years and then holding for 12 months. The company can claim SSE. Yes, the company can surely claim the substantial shareholding exemption, right? So we have made the points with share disposal as well. But what the requirement was? The requirement was that we need to make an explanation with respect to the disposal of these items and how much increase in Cloak Limited corporation tax liability is gonna be expected as a result of selling the warehouse as well as the shares in Set Limited as proposed. Okay, so with shares, of course, there's like going to be no gain to be taken into account. Why? Because it is being covered under the substantial shareholding exemption. But yes, when the building was sold, there has happened to be a gain figure of 78,300 pounds, which is the gain to be included in the taxable total profit pro forma of company, the Cloak Limited. And obviously, this would lead to an increase in its corporation tax liability. But the shares gain is, as it is not computed, as it is being covered completely under SSE, so it is not going to be taken into account. Now, what the rate for Cloak Limited, the company is? Yes, I've got one answer. You just need to figure out the tax on 78,300 being the figure of gain related to warehouse. Of course, the company itself must be paying taxes on the rest of the things, but they are just concerned with how much increase they will have to expect as a result of disposal of warehouse and shares. Of course, there's like nothing to be done with respect to shares, but with warehouse, yes. Yes, 25% is the main rate because in this year, there are two associated companies, the Cloak and the Set Limited. When there are two companies in the group, in the associated group, of course, the profit slabs are to be divided over two, and the revised slab will be of £125,000. Okay, let me just open the exhibit so that you can see that what is the current situation of Cloak Limited, so that altogether you may define that what has to be the corporation tax liability for Cloak Limited. Uh, Sorry if I mispronounce your name. Suman, now you have the hosting rights. Could you please transfer the hosting rights to me? When you click on your name, there appears to be three dots. When you click on them, you will find an option to transfer hosting rights to me. Because after passing on the hosting rights to me, then I'll be able to share the screen with you people. Okay, on the main screen, on the big screen, you will find three dots. There, you will find an option to transfer the hosting rights. Thank you so much. I'm so sorry for this inconvenience. So where was I? I was like telling you people that Cloak Limited is basically falling in the main rate. Why? Because we are calculating the tax, the corporation tax liability for the year ending 31st March 25. In this year, Cloak Limited has got more than 50% shareholding in Set Limited. These both companies, in fact, it has got 80% shareholding to be precise. So having a shareholding of more than 50% would mean that you are having an associate, and like having associated group of companies, this would have an impact on the lower and upper slab of corporation tax. So I'm just going to make the heading increase in corporation tax. So for the year ended 31st March 2025, there are two companies, namely Cloak Limited and Set Limited in associated group. And that's why the upper and lower divisible over 2. So I think I should just confine myself to the upper limit, as 250,000 is the limit for upper limit. It's divided over 2. So a revised limit will be of £125,000. The revised upper limit is of £125,000. Keeping the fact in mind that Cloak Limited is already having £130,000 of the profit. So this is like their augmented profit as well. I mean, there's no other further information in the question, but 130,000 itself is like indicating that it has crossed the upper limit. There is no, by the way, QCD could be found in the question. And that's how main rate will be charged on taxable total profits of Cloak Limited, since its profit is already higher than £125,000, or you simply say it's already 130,000, which is higher than the profit slab. Though it is not just the trading profit figure which is to be taken alone for the sake of deciding the rate, but it's profit, rent, interest, chargeable gains, other income, and then we deduct QCD. But considering apart from this chargeable gain in respect of disposal of warehouse, the rest of the information is not there, making me believe that the corporation tax rate has already achieved the main rate. And that's how 25% shall be charged. Any increase in the taxable total profit, which could be observed here as warehouse will be sold for a gain of 78,300. And where did I do this calculation? Refer to the spreadsheet for calculation. I'm just providing an ease to my examiner to find out where I have put the whole calculation thing, where the rest of the information related to my answer script is. So corporation tax will be increased by, could you please help me out in telling that 78,300 being the gain figure into 25%, what this value will be equivalent to? $19,575. So this is like going to be of 19,575, right? So this is how I have mentioned the points for increase in corporation tax liability as well. See, the same heading I have put on both word processing documents and as well as the spreadsheet. And even where I had to give a hint that a certain gain was calculated from the spreadsheet on which I'm going to do a further calculation, I have linked it. I mean, I have given the reference as well by mentioning that you need to refer to the spreadsheet for finding out this figure of £78,300. Is this thing clear to each and every one of you? How it will affect FCC or CFC? If it is not mentioned in the question, can you please say a little for foreign controlled companies? Okay, the foreign controlled companies, or specifically the topic name is controlled foreign companies. That's like one and same thing. See, I'm just going to simply tell it over here, though in case of controlled foreign companies, the things are like quite different. See here, they are going to make the disposals over the market values, could you see that warehouse has now been sold to an unconnected persons? But sometimes what happens is that a controlled foreign company is purposely developed in a country where the tax rates are lower. Uh, and our company is diverting all the profits to the foreign controlled company. Maybe we have first of all transferred our asset to that foreign controlled company, the controlled foreign company, and then controlled foreign company would have sold the asset further, where they would be like attracting lower amount of taxes. But we have to see that what amount of tax could have been charged had this gain be generated by our company in own territory. So for instance, if in our country the rate is 25%, but by making the control foreign company, by putting them in such a position that they would be like selling off the shares, and maybe their corporation tax rate is 10%. So it's like 10% was their rate on which the taxes were paid. And this is how you have artificially diverted your profit. But we will consider this thing that if the same value would have been generated by you, if the same gain would have been generated by you, then how much of the extra tax you had to bear, as you had to pay 25%. So the incremental amount which you have avoided, which is 15%, that would then be demanded by HMRC. Yes, CFC charge is like something else. But this is basically applied with an aim of figuring out that how much of the tax we have been able to avoid earlier, and the difference in the rate will then be applied. I mean, comparing it with 25% in order to see that how much of the tax we still owe to HMRC. As you are my enrolled student, so we may discuss CFC thing in detail in some like future session as well. Still, we have ample time. Maybe this could be like discussed in grand revision session. Okay, so now once again, we are going towards another requirement. It says that requirement B1 for 5 marks, that on the assumption that overseas business is carried on by Cloak Limited through a permanent establishment in the country of Hedlia, we need to calculate the total tax payable in the UK and overseas by Cloak Limited for the year ending 31st March 26. And this part of the question is carrying 5 marks. And there's another sub requirement for requirement B as well, but I'll come to it later. Now here the calculation is required. So if it is like primarily about the calculation, of course, I'm just going to choose the spreadsheet. Yes, permanent establishment, PE means the branch, and their profit is to be like taken as if it is your own profit, is to just to be amalgamated, added in your profit. So this is how the information is like mentioned, as they are trading overseas by establishing a permanent extension, having a branch in the country of Hedlia, and their taxable total profit will be of 30,000. And the country where this branch is existing, the company has not made an election to exempt the profits of branch, so they are still taxable in UK as well. And the foreign corporation tax rate is of 22%, which makes us believe that whatsoever the amount of tax has not been paid, that shall be payable by Cloak Limited in UK, because we are going to get DTR on the lower of the two taxes. Okay, so I'm just going to put the heading. Now this is about total tax payable by Cloak Limited having permanent establishment in Hedlia. Okay, so I'm just going to calculate the corporation tax liability for Cloak Limited by including all of their income as well as, any gains. So what what is their own trading profit. And see, we are going to do this calculation for the year ending 31st of March 2026. But where has it been written? See, when you just look at the requirement, it is being mentioned for the year ending 31st March 26, and in the year ending 31st March 26, the company's own profit are going to be 145,000 pounds, right? So their own trading profit is of 145,000 pounds, while the branch profits, which are to be considered as your own profits, are of 30,000 pounds. And see, in this year, the year ended 31st March 2026, Cloak Limited has not generated any rental income. They do not have any interest, and they haven't even sold any chargeable asset. They do not have a gain. So this is like said to be their total profit, though there is no QCD. I think I should straight away call it as taxable total profit. So what the taxable total profit is, 145,000 and 30,000, which it would be of 175,000 pounds. On this taxable total profit, we shall be applying the corporation tax. Now, in this year, the thing is, what has to be the corporation tax rate? See, the company Set Limited has already been sold by 31st of March 2025. In this year, this company, we need to see the companies who are said to be associated in the current period for the sake of apportioning our profit slabs. See, in case of companies, mark my words, the lower and the upper limit slabs are what? The lower limit is 50,000 and the upper limit is of 250,000, but it is going to be divided if we have got associated group companies, and all those companies with respect to current period shall be considered. But I hope if you have covered the administrative part of corporation tax, where we need to see whether the company is said to be a small and medium sized company or a company is said to be a large size company, because it does create a difference that how the tax liability should be paid. There, the profit limit, the profit threshold of 1.5 million pound is also divisible on the associated group members. But for that purpose, we need to consider all those associated companies which have been there in the group till the end of last accounting period. So we do not see that what is the associated group members for the current period, but we need to see that how many associated group members were there since the end of last accounting period. But in case of like dividing our lower and the upper limit, we need to see the associated companies who are there in the group with respect to the current period. And Set Limited is gone in the current period. It is just the Cloak company itself. So what's going to be the corporation tax rates? Can you suggest me? Having a taxable total profit of 175,000 and there is no dividend being received from any unconnected company, unassociated company. So their augmented profit is same. It is same 175,000. So what rate do we need to apply for the sake of computing corporation tax liability? This is not crossing the threshold of 250,000. We shall be applying 25% less marginal relief. So corporation tax liability shall be computed by first multiplying taxable total profit into 25%. What the taxable total profit is, it is of 175,000 into 25%, and then we will be deducting the marginal relief. Okay, so what the marginal relief formula is, I'm going to put a sign of minus because it is something which is being deducted. So we shall have to present it with the negative sign. Okay, what the formula is, upper limit here is 250,000, the unchanged one, because there is no concept of group company. And remember that there is one more thing on the basis of which profit slab is to be apportioned, and that is having made your accounting period for less than 12 months, which is not the case over here because they have made accounts for the whole year. So 250,000 is said to be the upper limit. Yes. And then we are going to deduct augmented profit. Here the augmented profits and taxable total profits are same because the dividends are absent. Now it is to be multiplied with taxable total profit over augmented profit. And I'm not going to do this thing. Why? Because the taxable total profit is 175,000. And similarly, the augmented profit is same because there is no dividend being received from any unassociated company. So why do I divide the same value as numerator and denominator? Because that would be like giving us a result of 1. So I'm not going to take this into account. Into marginal relief fraction, which is of 3 by 200. So 1125, I believe, is the marginal relief. After deducting the marginal relief, there we come to know what the corporation tax liability for the company will be. This would be of 42625. So this is like said to be the corporation tax liability for Cloak Limited. But this is the liability which has been calculated on the overall profit, which does include the UK profits as well as the foreign profits of 30,000 pounds. Now here we are going to apply for a relief which is called DTR, the double taxation relief, as the profits, though it relates to a branch which is existing in the country of Headlia, they have already been assessed over the corporation tax at the rate of 22% as what we have seen in the question. So whatever has been paid, we need to see what is being demanded in the UK, and the lower of two taxes would be deducted from the overall corporation tax liability in the form of a relief, and that's called double taxation relief. Okay. Are you all getting this point? So in the country of Headlia, the corporation tax rate is 22%. So for the sake of like calculating DTR, this is to be done under working 1. I am going to go down in order to see that how much is to be availed in the form of DTR. So how much tax has already been paid in overseas taxes? The tax rate is of 22%, which has been charged on the profits generated in overseas country, which is of 30,000. So this much of the tax has already been paid. But this is to be compared with UK tax being demanded on overseas income. Okay. So first of all, how much of the income I have included in UK corporation tax pro forma? It is of 30,000 pounds. This is something which has been included in UK corporation tax pro forma. But what rate is being charged? What rate is being charged on this overseas income? What rate is being charged? 17%. No. 30,000 out of 175,000. You're not comparing income. Though, see, I believe that you must be like trying to grasp the correct concept, but these are not the values you were supposed to pick up. 24.36. Yes, it makes sense. Okay, what is the lower rate? What is the low rate? The main rate, the upper rate is 25%. What is the minimum rate? 19%? So 25% less MR, the margin leave would mean like having a rate which is like somehow falling in between 19 and 25. More than 19%, but less than 25% from overall perspective. But I hope if you people have covered the concept related to trading losses of companies, this zone is considered to be the dangerous zone, which is 25% is marginally said that whatsoever the income which is falling in the marginal area would be attracting the highest most rate when it comes to loss adjustment. So for the sake of like adjustment of losses, which is obviously the different topic, we shall be preferably picking up those results first on which we are paying taxes over the marginal rate. But here I'm not discussing from marginal perspective, rather I am discussing the whole concept from overall point of view. Yeah. see what is the overall situation. Though the tax liability at 25% was 43750, but eventually they ended up paying less than this, which is 42625. So this is the amount of tax they are paying on the overall on the overall profit figure of 175,000. So 175 was the subject to taxation, and eventually we settled calculating tax of 42625. So I want to see that what is effectively the rate being applied. 42625 over 175,000. So 42625 divided over 175,000. This is like tax versus the taxable total profit. I mean, in the denominator, I have picked up the base on which this much of the tax is being paid. So the rate is 42645 divided over 175,000. This would be of 24.36%, right? Or you may take it as 24.37. This is 42625, sorry. 42625 is the corporation tax rate on 175,000. So effective rate is 24.3571, or you may simply take it as 24.36, right? Okay, so I just need to see that how much of the tax they are demanding on overseas income in UK. The rate is 24.36% into the income on which this rate is being imposed, that is of 7308. So UK is demanding more as compared to what has already been charged. And out of these two figures, we will be picking up the lower one because this is like gonna be relieved. So this is of, I'm going to put a sign of minus before it. It's of 6,600 pounds. So after deducting this amount, how much of the tax will eventually be paid in UK? This would be of 36025. So this is like said to be our revised corporation tax liability, because UK will no longer be paying taxes equivalent to that much amount which has already been paid, but that would automatically mean that it would be paying the remaining amount of tax in UK definitely, right? So I have put the heading, I did the computation on spreadsheet, and whatever the working was to be done, it was done vertically once the main format was completed. If there had been signed a treaty, then this would mean that the taxes were to be charged only in the foreign country, and UK will no longer be taking the responsibility to charge the profits in homeland. So there had been like no tax in UK had there been signed any double taxation treaty. In treaty, either of the countries would decide to charge the tax and the other country would stay silent. And in case of our subject of ATX, because it belongs to UK, so a treaty would automatically mean that the other country would be given the right to charge tax and UK will stay silent and they will not be charging the taxes. And this is like different from exempting a branch. Because in case of exempting a branch, you will not just be taking an accountability of the profit, you will not even be considering the losses implication as well. Is this thing clear to each and every one of you? All right. So let's move to the last requirement, which is like related to explanation. It is of worth 6 marks. It says that on the assumption that the overseas business is carried on by a wholly owned subsidiary of Cloak Limited. So except for creating a branch, except for instead of like extending your own business, you are creating another company in the overseas country. See, if you are going to incorporate any other company in some other country, that means you are making an investment. This is not to be taken as a part of your profit, rather it's an investment. And then it would like mean the same thing, whether the investment is of less than 50% or more than 50%, because if the investment is found to be of less than 50%, it is merely an investment. And if it is like of more than 50%, then the investment would become an associate. And you know that having an associated company would mean that your upper and lower profit limits will be a portion. And when at the time of deciding that whether the company is small and medium size or large size, it will be having an impact on the division of augmented profits as well. It says that explain the UK corporation tax implication. Implication would mean treatment. So what is like going to be the UK tax treatment having an overseas subsidiary, which is like wholly owned, which would mean that having 100% controlled subsidiary, but in another country, what is like going to be the UK treatment? And your answer should include an explanation of the corporation tax consequences for Cloak Limited of the receiving of dividend from the subsidiary company. See whether the company in which your shareholding is, whether the shareholding is of more than 50% or less than 50%, the dividend is an exempt income for a company. It is never taxable. It wouldn't become a part of our taxable total profit. But if at least the dividend is received from a non-subsidiary company, non-associated company, from a company in which shareholding is less than 50%, at least it would be added into the taxable total profit to figure out augmented profit, and hence figuring out the size of the company, whether being small and medium or a large company. But if the dividend is being received from a subsidiary company, it is totally ignored. It is not even going to be taken into account to be added as a part of augmented profit. It's not even going to decide the status of the company. And dividend is, by the way, exempt, right? So this is all we need to mention. But see, it does matter that what the UK resident status of that overseas subsidiary in Headlia is. As Headlia will be working in overseas country, so they will be like physically existing in overseas country. If it is being controlled and managed by the shareholders who are there in UK, or if their central control and exercise is being executed by UK, I mean, if majority of the, if at least 75% of the board meetings are going to be conducted in UK, then we would consider that this overseas subsidiary is basically controlled by UK. So it's a UK resident company. And in that case, if a company is like said to be a UK resident company, then at least they could become a part of our chargeable gains group or group relief group for the sake of like adjustment of losses. But if the company, though it is like existing in overseas country, if it is being controlled and managed by foreign personals, foreign shareholders, then unfortunately, despite having a shareholding of 100%, we would neither be incorporating this company as a part of our group relief group or chargeable gains group. So we need to at least make 6 valid points in order to secure 6 marks. Let me just show you the standard solution straight away. And I would tell you that if I had to write it down, I must have split the whole thing into 6 points so that my examiner would have easily given me maximum marks. It's like the subsidiary company would be an associated company of Cloak for the purpose of determining the rate of corporation tax payable in future accounting period. So I must have like written straight away simply that it would having an impact on upper and lower profit slabs for determining corporation tax rate. As Cloak Limited taxable total profits are forecast to be 145,000 for the year ending 31st March 26, they will exceed the reduced upper limit for augmented profits of 125,000 pounds. See, in this period, as the Cloak Limited is existing alone, as they have already sold shareholding in Set Limited, but having another subsidiary in the country of Headlia would mean that there will once again be two companies in an associated group having an impact on profit slabs. Right? I must have made this to be as a separate point, right? I'm sorry. Then the profits of the overseas business will only be subject to UK corporation tax if the business company is resident in UK. This is something which I have just discussed. And the next point would be the subsidiary company is to be incorporated overseas. Accordingly, it is not resident in UK unless it is going to be managed and controlled from UK. And then any dividend received by Cloak Limited from overseas subsidiary will be exempt income for the sake of UK corporation tax. And the other statement would have been the dividends will not be included in calculating augmented profit of Cloak Limited because Cloak Limited and the overseas subsidiary will be associated companies. 100% owned companies. This line should have been like better explained that the dividend will not be included in calculating augmented profit for Cloak Limited because Cloak Limited is having a subsidiary, or you may simply say that Cloak Limited is having more than 50% shareholding in overseas company. So this could be shortened and this had to be split into 6 statements. And that's how the answer has to be presented. Is this thing all clear? And I have told you one extra point as well, that if the company is said to be a UK resident company, then they would have surely be included as a part of our group relief group and chargeable gains group. But if it is, as it is being incorporated overseas, but if it is like centrally controlled and managed by foreigners, foreign shareholders, so in that case, it would be typically called as an overseas company, an overseas resident company, not a UK resident company. And then this company would not, unfortunately, be included as a part of either group relief group or chargeable gains group. Right? I hope this is like all clear to you. Now, before that, I move to question number 3 of section B. Let me discuss a very important thing, which I kept on discussing doing the computation related to section A and section B questions. These tips are always to be remembered while handling your exam. You need to attempt easy questions first and do difficult or time-consuming questions in the last. You really need to keep an eye on time management thing. You really need to set a target ending time once you start like any requirement. You really need to have an ending time in your mind and try finishing it by that time so that you may complete the whole paper timely. And whichsoever requirement is found to be difficult to you, you just need to leave it over there and move to the next question. And then, of course, if you're just keeping a track of the time, you will still be left with the time in the end. You may get back to those requirements which you have not touched, even if you do not have absolutely even a 1% idea of any requirement. As considering you have time, you may still insert few lines about it. Because as a professional student, I cannot say that you cannot write even a single thing. If the question is about income tax, certain topic, you still know about income tax. So whatever you know, you may try writing it down just to give an impression to your examiner that you at least know something. Even if that something is not making sense, but completing a paper is like definitely having some weightage. And then what I've told you that you need to give associate 1 point for each mark. So if an explanation oriented question is of worth 4 marks, you really need to produce 4 valid points. And whenever you are making a valid point, your statements do not go unnecessarily long. 2 to 3 statements are maximum. If you just keep on like even making every time 2 to 3 statements, this would even lead to the shortage of time. So you really need to work on that thing. So even 3 to 4 is like quite a lot. 2 to 3 statements are enough. And if the valid statement is being composed in a single statement, then even then it's perfectly fine. You need to give short headings in order to explain whatever the point of view you want to present in front of your examiner. So technical knowledge is important, and for that purpose you need to cover the whole syllabus. And whenever you're going to write the statements, your language needs to be professional. It needs not to be something which gives an impression to the examiner that you haven't covered any particular type of tax completely. So by using the technical wordings which are associated with certain type of tax, that will give a feel to an examiner as if you have covered the technical aspect of the syllabus completely, right? So these are the important things which you need to keep in mind. And once again, I'm going to advertise our revision batch, for which I told you last day that we are giving you a lot of facilities with respect to this revision camp at a very subsidized offer of just 30% of the regular fee being charged, in which uh, game uh, game changer webinar series for the previous sessions, the practice sessions, and the pre-mock session, as well as the final mock. And final mock will be checked, its feedback, detailed feedback will be given. These all things are basically included in it, and we'll be like providing you with a complimentary mock along with its solution and debrief session. And the notes will be given to you, and we'll be giving you a recorded content of maximum possible syllabus area. And you will be entered into the enrolled students WhatsApp group, where you will be like given the support by the tutor as and when required, right? Okay, so before that, I move to the third question. Of June 2025 attempt, let me just tell you that what you need to do in last 10 days before your exam. In last 10 days, you will be revising the whole syllabus in terms of your notes, and don't go through the exhaustive Kaplan textbook. You need to practice 25 to 30 important questions out of Kaplan revision kit. And this is something which should, for which you will be using the kit, and not uh, any any of the past papers, which is like uploaded on the ACCA portal. But you will have to attempt mock. And even if you get a chance, then extra practice material should be done on the exam portal and get it checked, so that you will be like having a feedback that how nicely you have presented your answer, and what are basically the points, the areas in which you are lacking, on which an improvement is required, right? Revision group will be merged with the regular batch, but see, if I have 391 recorded content videos for the regular batch, all videos are not going to be given to the revision oriented batch for syllabus perspective. This is something I'm talking about from syllabus perspective. But see, maximum videos will be given to the students, especially those having a high percentage of being tested in the exam. But when it comes to the practice thing, the notes and the revision material, this is like all going to be same for each and every student, be whether they are a part of a revision group or a regular batch, right? Okay, let's quickly move to the last question of 2025 June exam attempt. When we will be receiving the pocket notes? See, I have handed over each and everything to the administration. I hope they must be waiting for the game-changing webinar session to come to an end, and then they will be like sharing a whole link, a drive link to each and every one of you, so that you will be having an access to each and everything, because I did show you people last time that see what the documents that I'm using right now for the sake of like conducting this day 1 and day 2 session. These documents will be given to you people. You people will be having an access to the pocket notes. Then this is an ACCA developed document in which multiple ethics oriented questions have been included. See, ethics part is always included as question number 1, but see, in this document they have not basically copied and pasted the whole of the question 1. Rather, they have extracted only the information related to the ethical part, and then their suggested solution, I mean, preferred solution is given as well, right? So it's like, see, this was something discussed in a past exam attempt. It was a part of section A question, but they have extracted only those lines which were which were like relatable to ethical dilemmas, ethical concerns, and their response solution is also given. So this is like going to give you a quite good hands-on grip to ethics oriented questions, because this is like definite, this is for sure that they are going to be tested. And on the same link, you will be finding a document related to formats, I mean, how we are going to address the things related to memorandum reports and the notes. Memorandum report and notes, they are pretty much same. They are to be presented in a pretty much same way. And then there is like a document related to grant revision, but this will be like shared with only enrolled students. And then for every student, there's an important question list as well. Is this thing clear to each and every one of you? Okay. Now, quickly moving towards, as we are running short of time, so we are now absolutely rushing towards question number 2 of section B, or altogether we can say that this is question number 3. Adil and Sikta. This is the question. Kindly read the background information first, and then I'll take you to the exhibit. Do update me once you are done reading this background information so that I may take you to the exhibit. All right. Here you go. This is the exhibit. Keep one thing in mind, that as there are certain separate provisions applicable on married couples and civil partners. For instance, if there are two people who have not legalized their marriage, but they are living together as if they are a married couple, so the same provisions for taxes will be applicable on them. I hope you have read whatever is like written in front of you. Let me scroll up the screen. This is the next information you need to go through, and afterwards I'll be scroll it up like for one more time, and that's how you would have completed the whole of the question. All right, so I believe that you must have all covered it completely. So here we have the requirements. Requirement A, which is of worth 5 marks. Here we need to calculate With supporting calculations, which of the two potential gifts from Adel to Sikta will produce the greater net annual income tax saving for the couple? Okay, so if you just have a look at the exhibit, this is basically the situation related to Adel. See his overall income of £90,000, which makes me believe that Adel is a high rate taxpayer. He must be paying income taxes at the rate of 40%, though up till £37,700 of his first taxable income, he must be paying taxes at the rate of 20%. But of course, on the excessive amount which is crossing the basic rate band threshold, he must be paying taxes at the rate of 40%. But if he is like going to transfer an income producing asset to SICTA, see, SICTA's financial situation is right now is like not good as compared to Adel, because she's like just having 14,000, and after deducting personal allowances, a very little bit of the figure will have been left behind, which makes me believe that she is a basic rate taxpayer. So as according to the requirement, which two potential gifts could be made which would result into uh, saving of taxes, and they are income producing assets. So if you just have a look at the exhibit, see, Adel is running his business, so he must be generating trading profit. But yes, if he would be like transferring the asset which has been let out and generating rental income, so this rental income will be received in the name of Sikta, and she will then be paying off the taxes. Because if the same asset which is producing a rental income of £15,000, if Adel would still continue having this asset, he will be receiving a rental income of 15,000, and on this 15,000 he shall be paying taxes at the rate of 40%. I mean, how much of the tax cost he will have to bear? He will have to bear a tax cost of 6,000. But if he is like going to transfer the asset, an income producing asset, see the property which is being let out, it is an asset. If it is like being transferred to Sikta, she will be producing the rental income, and by including the rental income in her income tax pro forma, she, as being a basic rate taxpayer, she will just have to pay corporation tax at the rate of 20%, which is of £3,000. So Adel will no longer be paying the taxes of 6,000, while Sikta will be paying taxes of 3,000. Adel will be able to save 6,000, while Sikta will have to pay 3,000. So 6,000 is the saving, while 3,000 is the payment that shall have to be made. So overall saving will be of £3,000. Are you all getting this point? That if from one of the member, I mean, out of one person in the couple who is like making a transfer of this asset, altogether the couple will be able to save taxes of worth £3,000, right? Okay. What next could be transferred by Adel to Sikta, which is income producing asset, and he will then be like saving the taxes, but Sikta will be paying off the taxes, but there is like an overall reduction in the taxes. See, if he has got a shareholding in Bovik Limited on which he is receiving a dividend income. So shares is an asset and they are producing an income called dividend. If he will be transferring the shareholding in Bovik Limited to Sikta, then he will no longer be paying off the taxes. Rather, Sikta will be paying off the taxes. Okay. So if Adel keeps this 12,000 in his computation. See, he does have dividend from other sources as well, which I believe they must be like consuming their nil rate band of £500, because having a shareholding from Bovik as well as other UK companies, either way his nil rate band must have been consumed. So if he keeps this £12,000, he will be paying high rate, he being a high rate taxpayer. So what is the dividend? high rate. This is of 12,000 into, I believe, 33.75% is said to be the high rate over the dividends, which means that he was paying taxes of 4050. But if he's like going to transfer the shareholding to SICTA, then he will no longer be paying this much amount of tax. I mean, of worth 4,050 pounds. But then transferring the shareholding to SICTA would mean that SICTA will be including this 12,000 pound. And see, she already does not have any dividend. So she will first of all be able to consume the nil rate band. And then by being a basic rate taxpayer, she will just be paying taxes at the rate of 8.75%. Could you please tell me that how much of the tax she will have to pay if this shareholding will be transferred to her? 1,006. Okay. So if Adel would be like transferring the shares, producing an income of 12,000, then he will be saving 4,050. This is the saving. But the other member of the couple will be liable to pay 1,006. So what is an overall saving expected in this regard? 3,044. Right? Now just tell me that according to the exhibit, Adel must be in a state to transfer this 8,000 as well. I mean, in the other UK companies in which he has already got a shareholding is an asset. So if he is like making a transfer of this shareholding to SICTA, then 8,000 pound income will be transferred to her. And then he will not be paying off the taxes. Rather, she will be liable to pay off the taxes. But why did I not consider this transfer? Yes, dividend limit band of 500 pound is available to both, but if adult will no longer be keeping this 12,000 pound, he won't be like having, he won't have to show this 500 pound nil rate band because he will still be consuming it against the other dividends that he's like still having. But SICTA, as she doesn't have any dividend income being received right now, so this is like going to have an impact on her income, but not on adult's income. Okay, I was saying that Adel has three income producing assets: rental income, dividend income, and then dividend income. But why did I discuss only the rental income and the dividend of 12,000? I did not discuss a dividend figure, which is transferable, by the way, of 8,000 pounds. Why did I not discuss this thing? Okay, let me take you to the requirement again. It says calculate with a sporting explanation which two potential gifts, though Adel has a potential to gift three things to SICTA, but it is like producing the greater net annual income tax saving. So if he is like going to transfer those incomes which are producing higher income technically, this is like something which would be like making a great difference. He will not be having to show that higher figure in his tax performer. Rather, SICTA will be, first of all, having this like an access to that higher level of income. And then this is like all going to be accommodated over the basic rate. So out of, I believe, 15,000, 12,000, 8,000, which two gifts are basically, as we need to confine till two gifts only, though if he wants to, he may make three gifts at least, but it's 15,000 and 12,000, which are on the higher side. They're producing higher income and hence higher taxes. So removing those income producing asset in Adul's performer would lead to higher tax saving, and on the other hand, SICTA being a basic rate taxpayer, she will not have to bear much. Yes. £8,000, yes, you're right, as it is not giving greater net saving, which is why we did not consider it as a part of potential gift that could be made by adult to SICTA. Though if the question was like a little bit different, if they said that how many gifts could be made by adult to SICTA in an attempt to reduce his taxes, then he might end up even transferring this third this third asset as well, the shareholding in other UK companies. Is this thing clear? Okay, so here the calculation part is not too high. We may show it on word processing document, because I always say that if you find that the calculation and explanation both are required to be done, and the margin of calculation is not very high, you may do both explanation and calculation on the same document. Let me just do it for you. First of all, I am going to copy the requirement, going to the word processing document. I shall be pasting it over here. Two potential gifts from added to SICTA will produce the greater net annual income tax saving. See, this is how I have converted the requirement into a heading without typing much, and hence I believe that one could save time this way as well. So this is like going to be requirement A. Okay, so Adil is currently a high rate taxpayer having an income of £90,000, while SICTA is a basic rate taxpayer having an income of £14,000, right? So if Adil would transfer the property producing rental income and shareholding in Bovic Limited, then it may result into higher income tax saving. So I'm just going to show you the saving that is being achieved this way. Gift of UK investment property. This is another heading that I need to give as I'm going to do the calculation. Saving by Adil, you told me this is like 12,000 rental income. If he will no longer be including that rental income, he shall be paying taxes at the rate of 40%, which would mean that how much of the tax, sorry, 15,000 is the rental income. So that would mean that he will be able to save £6,000, and tax due or tax to be paid by SICTA by having this rental income would be charged at the rate of 20%. So 15,000 being the rental income into 20% being charged, this would be of £3,000. So what is like going to be the overall tax saving in this regard? That would be of 6,000 less 3,000. Altogether, in this case, £3,000 will be saved, right? And then if it is about gift of shareholding in Bovic Limited, then I'm just going to copy these lines. Going to turn this into a subheading, gift of shareholding in Bovic Limited, saving by Adel. How much of the dividend he was receiving in respect of this? That was of £12,000, and he being a high rate taxpayer, he was saving taxes over a high rate, but the dividend high rate is of 33.75%, and hence it would lead to a saving of 4050. I've already shown you the calculations, but if it is to be transferred to SICTA, first of all, the dividend income of 12,000 shall attract a nil rate of £500. And then she being a basic rate taxpayer, she'll be paying tax over the basic rate, which is 8.75%. Since this is the matter of dividends, then how much of the tax is to be paid in this regard? This is going to be of, you told me this is of £1,006. This is something which they will have to pay. So altogether, how much of the saving will be achieved in this regard? 4050 will be saved, but 1006 shall have to be paid. So this would lead to an overall saving of £3,044, right? So I have told, first of all, who is a higher rate taxpayer and who is a basic rate taxpayer, which two assets would be like producing higher income tax saving. And then I did show the calculation. And see, if you just have a close look at the computation, though we had to discuss two potential gifts, but out of this two, which of the two potential gifts will be producing the greater net income? I mean, even he had three, out of which we had to select the higher the those assets which were like on the higher producing income side, and out of these two, which one is producing more tax saving? Though 15,000 seems to be like on the higher side of the income, but by transferring this UK investment property, there seems to be a saving of only £3,000 altogether, right? But if the shareholding in Bovic Limited is transferred, then out of these two, it would result into a saving of a little bit, but more tax saving is being observed, which is of 3,044. So this was like the calculation, and then we had to evaluate as well. So I would write that, therefore, gifting shares in Bovic Limited would result into higher net annual tax saving for couple, right? I hope this is all making sense to you people. Is this thing clear? See, they are saying that you need to select two, and out of two, which one is producing the highest tax saving. So you're not going to clubbing the two investments together, two shareholdings together. Yeah, in fact, on the rental income, it seems to be like saving 20%, but maybe because of not having an advantage of nil rate band, overall, the amount of tax that could be saved in terms of like transferring the shareholding, that seems to be like more fruitful as compared to the transferring of UK investment property, right? Okay, so let's have a look at the second requirement requirement B, on the assumption that Adil gifts his shares in Bovic Limited, explain why gift holdover relief will be available for the purpose of CGT. And this is of like carrying 2 marks. And considering the time is like already up, but I shall be like completing it by not doing the calculation myself. Rather, I'll be showing you the standard solution, but I'll have to make you people understand the things as well. Okay, so why gift holdover relief is available on the gift of shares in Bovic Limited. It's an unquoted company. Whensoever one person is making a transfer of the shareholding to another person, then the gift holdover, which is like a connected and a familiar person, then a gift holdover relief will be available provided the company is said to be a trading company. And see, this is about the shareholding. So unquoted companies' shares are to be treated as business assets. And on the other hand, the person to whom this shareholding is being transferred needs to be like resident in UK. The holding for 2 years is like not the required thing, because holding the shares for 2 years, that is the necessary criteria for BADR. Right? Is this thing clear? But won't you be like I mean, you must have like some other points as well, which you can quote for the sake of like answering this part, because the donor and donee both are to be having a mutual consensus over the transfer, and then the gift holdover relief will be available. So there are other things as well. Let me just show you the standard solution for this. So this is basically the answer. And then I am going to take you to the second requirement of the question. I mean, requirement B2. Explain with supporting calculations the impact of making a gift holdover relief claim on the chargeable gains that will be realized by both Adil and SICTA. Okay, so let's have a look at the information once again. Here we have to do the computation as well. See, as the margin of calculation is very low, so I believe that both the explanation and the little bit of the calculation should be done on the word processing document. Could you see that how the chargeable gain is going to be calculated when two familiar persons are making a transfer within each other? Then the disposal proceed should be equivalent to the market value of the asset being transferred, right? So what was the market value of the shares being transferred by Adil to SICTA? It is having a market value of 404,000 pound, and Adil himself had acquired the shareholding for 386,000 pounds. So 404,000 pounds should be taken as the disposal proceed, while the cost figure is of £386,000. So what is like going to be the chargeable gain in this case for Adel, the donor? It is of £18,000. So this is the gain for Adel. However, as the company Bovic Limited is Adel's personal company, because he can at least 5% of the voting rights. And see, it's an unquoted company, first of all, unquoted trading company. So he may have exercised the option of deferring the gain under gift holdover relief. But if whether the company is an unquoted one or a quoted one, if your minimum shareholding is of at least 5% or more, and if that company is having chargeable non-business asset, then it will unfortunately be having an impact on the value of the gain to be deferred under gift holdover relief. So considering if you have unquoted shareholding, that is to be treated as business asset and hence qualifies for gift holdover relief. And if you have a shareholding in quoted company of at least 5%, even then the shareholding will be treated as a business asset, and upon transferring the business asset, it will qualify for gift holdover relief. But if in any type of company, if the shareholding is found to be of 5% or more, then we need to check the status of the asset the company is having. See, it is like mentioned in the end that the Bovic Limited, in which Adel is having an ample shareholding of 5%, having 12% shareholding would mean that it is to be treated as his personal company. Though the assets were altogether of 4.1 million, but out of them, 3.8 million was representing to chargeable assets. I mean, those non-current assets on the disposal of which we shall think about calculating gain or loss. And the remaining 0.3 million would be, maybe they are not even non-current assets, they are current assets of the company. So we are just concerned with the non-current assets, which are the chargeable ones, and they are of 3.8 million. And out of these tangible non-current assets of the company, 0.4 is like relevant to the investment made by the company. I mean, it is like being held as non-current asset. It is being considered as non-current asset, but it is not that type of asset which is being used for business purposes. Rather, it is to be considered as being used for investment purposes. I mean, non-trading purposes. So I just need to know that what proportion of the asset the company is having right now, which is being used for their trading activities, and it is a tangible, non-current chargeable asset. And in relation to that gain, only the gift holdover relief could be claimed. Okay, so let's see, as what I've calculated, that £18,000 is said to be an overall gain which is going to be generated if transfer of the shareholding in Bovic Limited from Adel to SICTA will be made. Though gift holdover relief is applicable, but it is going to be unfortunately restricted. 3.8 million is the overall asset the company is having, out of which 0.4 is not being used for trading purposes, not being used for business purposes. Then that would mean 3.8. Sorry, 3.8 is the 3.8 is see, it says that the company is basically having altogether 4.5 million of worth of assets, though out of which 3.8 are relevant for CGT chargeable gains purposes, and the remaining 0.4 are to be held as long-term investment. There is like a little bit mistake in the calculation by the examiner as well, because if you just add 3.8 and 0.4, it would become 4.2. So they had to write 4.2 in the script, right? But okay, just leave it. If altogether the total non-current assets are of 3.8 and 0.4, this is like basically the total non-current assets, chargeable assets, out of which 3.8 million assets are being used for trading purposes. if 3.8 million are those chargeable assets which are relevant for CGT purposes, which are being used for trading purposes, while 0.4 is additional being used for investment purposes for non-trading purposes, then I need to see that how much proportion of the gain could be associated with those assets which are being used for like trading purposes, because whatever the gain like related to investment oriented asset, that is like said to be the gain linked with the non-trading asset, and it is like not deferred in the form of gift holdover relief. Could you please tell me what this value will be? How much of the gain will be deferred under gift holdover relief? Okay, so I got the answer 16683. Thank you. 16285. Sure. 16285, is that so? 16285 point something. So it's like 16286. So this is the gain which is going to be held over, and the remaining gain will be chargeable upon donor, which is ADL in this case. Okay, so now SICTA is having an asset, and the donor of the asset will be assumed as if they are acquiring the asset over the market value at the date of transfer, and the market value of these shares were 404,000. But against this value, this market value is going to be reduced by the amount of any gain being held over in the form of gift holdover relief, which is of 16,286 pound. And that's how we'll be able to come to know what the base cost for the shares will be. And that is of what is going to be the base cost for her. 404,000 being the market value of the shares transferred to her minus the amount of deferred gain. This is of 387714. Are you sure? And that's how I believe this is the correct value. When she will be like selling these shares later in March 27, the gain realized by her will be like higher. Why? Because her cost of the shares has been reduced by the amount of gift holdover relief claimed. So if with the lower cost, she'll be like computing her overall future gain, her future gain will be increased, and she will be like liable to pay more taxes in future. Let me show you the standard solution. They haven't in the standard solution, they haven't calculated the base cost, but they have said that by the amount which is like applicable, eligible for gift holdover relief, the relevant future gain will be increased. Obviously, gift holdover relief is going to reduce her base cost, and then it will have an impact on increasing her future gain. Kindly have a look at the information. Do update me once you're done reading this question so that I may take you to the last requirement of the question. All right, so let me just take you to the last requirement of the question. By the way, requirement C is, I believe, having two sub-requirements. So let's have a look at the first sub-requirement. On the assumption that Adel dies before 6th April 2032, we need to explain the availability of BPR, the business property relief, in respect of the gift of his shares in Bovic Limited. And okay, so first, explain the availability of business property relief. See, the business property relief is for sure available. Why? Because as the gift of the shares in Bovic Limited is being made, which is an unquoted company. So gifting shareholding in unquoted company would mean that BPR would be available at the rate of 100%, provided First thing I have discussed that Bovec Limited has to be an unquoted trading company, which is the condition being met, and Adel must have owned the shares for at least 2 years prior to the date of gift. So these are the condition being met over here. But if the company whose shareholding is being met is having any accepted asset, I mean, if they are having any asset which is being used for investment purposes, then the business property relief will be restricted, right? So, and then who will now be having the shareholding? If Adel will be transferring the shareholding to SICTA and he dies within 7 years of making the transfer, then death IHT shall be computed. But here, at the time of computing death IHT, BPR, the business property relief, will still be applicable if either SICTA will be owning the asset at the point of death of Adel, or if she had sold the shareholding in Bovec Limited before the death of Adel, then she must have acquired a replacement asset. As SICTA will be selling the shares on 1st March 27, as what the information given over here, further information is required. So this is like being a skeptical thing to be shown over here, that further information is to be required, that whether she has acquired any qualifying replacement asset or not, so that we may believe that whether the BPR would still be applicable at the point of calculating death IHT on a lifetime transfer or not. Is this thing clear? Now we are heading towards the last requirement, which is requirement C2, where we need to explain the specific circumstances in which the maximum inheritance tax liability would arise in respect of the gift and calculate the amount of this liability. So let's have a look at the exhibit again. See what I've already told you. That the maximum liability would arise if Adel dies, as in after 1st March 27, as BPR will not be available if SICTA wouldn't be like having a replacement asset, as what we have mentioned. But before 1st July 2029, as he has made one prior gift on 1st July 2022, which will use part of his nil rate band. See, let me just show you. It is said that he has made one previous lifetime gift to his daughter on 1st July 2022, which would mean that when he dies in 2032, his nil rate band is going to be impacted by the chargeable transfers made in the last 7 years. I mean, by the chargeable amount, by the gross chargeable amount of this asset, which is of £108,000. And then there is one more thing to be taken into account as well, as after gifting this shareholding in Bovec Limited to SICTA, when he is like planning to give the shareholding on 1st March 23, if he would die at least 3 years after the date of making the gift, the taper relief will also be available, which would then be reducing the amount of his death IHT, right? So let's quickly have a general calculation, as in the shareholding which is being transferred by Bovec to SICTA right now on see when the shareholding was being transferred, it was being transferred on 1st March 23, 1st March 23, which is basically falling in the tax year 22-23, as both donor and donee, Adel and SICTA, are alive. So this is like said to be the lifetime transfer. And from one individual to another, the transfer is being made. So it is to be classified as per pet in the lifetime, I mean, the potentially exempt transfer. Now, first of all, I will be calculating the chargeable amount of gift. The transfer of value is basically the value of the estate being transferred. It is of £404,000. Of course, it is not eligible for either small gift exemption or marriage exemption. But yes, annual exemption for the current year as well as the previous year shall be available. £3,000 is the annual exemption. So for 2 years, this is going to be of 6,000. So the chargeable amount of gift will be of £398,000. So this is like said to be the chargeable amount of gift. But see, in the lifetime, it is going to be covered 100% under business property relief. But if Bowick dies within 7 years of making this transfer, and we believe that SICTA had sold these shares on 1st of March 2027, and she has not acquired any replacement asset, then we shall definitely be not assuming BPR to apply. Rather, and see one more thing, Adel acquired the shares on 1st March 23. If he would be transferring those shares to SICTA, that will be made on 6th April 25. So technically, the date of transfer of shares is 6th April 25. In the lifetime of Adel, it is falling in the tax year 25-26. Though the rest of the calculations are pretty much fine. The transfer of value is £404,000. Annual exemption for 2 years shall have been deducted. The chargeable amount is of £398,000. But though this is the pet in the lifetime, but the whole thing is like going to be covered under uh, the business property relief. But if the donor dies within 7 years, when provided the donee has already sold the asset on 1st of March 2027 and she has not acquired any replacement business asset, so that would mean that we shall be like doing the whole calculation by not applying BPR, because this would not be continued till the date of the death of the donor. So what the chargeable amount of gift is, had the chargeable amount be computed in the lifetime, this is of £398,000. And this is going to be the gross chargeable amount for the sake of computing death IHT, against which we are going to deduct NRB. NRB of the year of death shall be applicable, as he is supposed to die in 2032, or maybe later than that, earlier than that. We believe the NRB will be the same in future years. It is of £325,000, but it needs to be adjusted for any chargeable transfer made in the last 7 years. As he has already made a chargeable transfer of £108,000 in the past, so this is like going to get deducted, and hence the NRB is going to be reduced. It is now going to be revised over £217,000. So after deducting the available NRB, what is like going to be the taxable amount on which death IHT shall have to be calculated? This is going to be of £81,000, on which death IHT shall be charged at the rate of 40%. So this would lead to a death IHT of £72,400. And this will be further reduced down if there is like going to be a gap of at least more than 3 years from the date of gift till the date of death. But if donor dies within like 3 years of gifting the asset, then this is like going to be the maximum amount of tax that shall have to be borne by SICTA, I mean the donee of the asset, because there will then be no taper relief to be applied in this case. Let me show you the standard solution for this. Let's quickly be going to the maximum potential IHT liability calculation. And then let me know if you still have any query, any question with respect to this. And see, I would like to clarify one more thing. I hope you have gone through the solution. See, when they said that Warwick Limited is having an assets of worth 4.5 million in total, they have mentioned this thing like in a very confusing tone. It happens rarely, but it may happen that if 4.5 million is said to be the total asset, by total asset, I mean to say both the non-current asset and current asset. Current asset is never chargeable for CGT purposes, and as far as non-current assets are concerned, some are chargeable, some are exempt, right? Out of this 4.5 million, 4.1 million asset is being used for trading purposes. And even if there could be like business goods, business items, products, inventory, this is also being like treated as being given the name of trading asset. But we are just concerned with those non-current assets which are chargeable in nature. So out of this 4 million, 3.8 million is not just the non-current asset, but this is like chargeable in nature as well. And 0.4 million is additional. It is not included in this 3.8 million. This is like 0.4 million is additional, which is being included in 4.5 million in total. And this 0.4 million is basically related to long-term investment. So when it comes to investment having a shareholding, this is also like having non-current asset. And this is also chargeable because when the shareholding is sold, we have to compute either gain or loss. But this is not to be treated as trading asset. Rather, it is to be treated as investment asset, I mean the non-current asset. So if I just have to see that how many non-current chargeable assets are there, then it is 3.8 and 4.4. I mean 3.8 and 0.4. They have two common things. They are not just non-current assets, but they are chargeable as well. I mean, upon their disposal, I shall be interested in computing either their gain or loss. So the overall asset worth is of 4.2 million, which is both non-chargeable, non-current asset as well as chargeable assets, out of which only 3.8 is relevant to those non-current chargeable category which are being used for trading purposes. I mean, this is not being used for investment purposes, non-trading purposes. So 3.8 is the value for those chargeable non-current assets which are being linked with trading use, while 4.2 million is the overall worth of asset, which is though non-current and chargeable asset, but it is not being used for trading purpose entirely. It does include 0.4 million of the worth of those assets which are being linked with investment assets. So this was like quite mentioned in a confusing way, but see, you have gone through section A, B, both. This is the only statement which might have given a little bit tough time to the students, while the rest of the things are like very simple and straight. What is your opinion about June 2025 exam attempt? It is not difficult but lengthy. Yes, but with advanced taxation, this is like going to be the case always, that it is absolutely a lengthy attempt. Every time, whatever the question or the combination of things would be tested, this is like going to be consuming a lot of time. Third question, having many requirements, but for 20 marks. Yes. Sometimes the rest of the requirements could be solved easily and quickly, though they'll be carrying the same marks as compared to like questions, what we have seen over here in third question requirement. They are quite a lot. They are like carrying same marks, but you will have to produce maximum computations over here. Now, students, do you have to say anything else in general related to advanced taxation? Any query, any concern? If there is any, please drop your concern in the dialog box. Students, do you have any concern related to advanced taxation syllabus in general, or any query related to our revision batch, anything else in which you are interested in knowing, please let me know by dropping your concern in the dialog box. All revision batch communication would be through regular batch WhatsApp group now. Yes, it is like going to be done through the normal WhatsApp group. You need to scan the QR code available on the LMS. I mean, when you are allotted a login, then you will find a tab where you can scan the QR code and become a member of our enrolled students WhatsApp group. Now, I believe that the session will have been fruitful for you people. You must have got an opportunity to grab a lot of new concepts. You must have understood that how the things are to be handled, at least to the extent of June 2025 exam attempt, right? So now the time has come to wind up the session. I wish you all people a very best of luck for your upcoming exam attempt, because I do not know exactly that who is a part of my enrolled uh, group, or who is just taking this game-changing webinar session. But I wish all the very best to each and every one of you. May you all succeed in your upcoming exam attempt. Now the time has come to wind up the session. Thank you so much for being a part of this session. Goodbye.